Welcome. In this video, what happens if we buy 300,000 Zbcn today? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
But first, let's analyze Zbcn.
For investors conducting technical analysis in the cryptocurrency markets, price behavior in certain zones is extremely important. These behaviors play a critical role in helping investors forecast future price movements and build strategies. One of the most valuable structures in this context is known as the order block. These zones represent areas where the price previously reacted strongly and are valuable both for tracking institutional investor footprints and identifying key buy-sell regions. In the current analysis, a bearish order block has been identified at the level where the price is located. A bearish order block represents a zone where a strong downward move previously began and is typically where large players placed heavy sell orders. This area often acts as a strong resistance zone because when the price reaches this level again, selling pressure may resurface. Therefore, such areas are key points where an upward move must be tested and validated. In this context, the fact that the current price is approaching or even touching this bearish order block is a highly critical development. It signals a strong battle between buyers and sellers in the market. There is still a possibility that strong selling pressure could emerge at this level, as it did in the past. However, this time might be different, as the price returning to this level after previously testing it may indicate a shift in momentum and growing strength from buyers. At this point, the most important development to watch is whether the price can break above this bearish order block. If the price manages to break through and rise above this level, it would produce a very strong technical signal. This signal suggests that bears are losing strength and bulls are taking control of the market. A retest of this zone after the breakout and a successful confirmation of support would be a strong indication that the uptrend may be sustainable. Volume analysis also plays a major role when price breaks through such resistance zones. If the price breaks through this order block with strong volume, it confirms that the breakout is not a fakeout, but rather a genuine bullish signal. High volume breakouts show that large players are entering the market and supporting the breakout. On the other hand, breakouts without volume are often short-lived and can result in the price falling back below the resistance. When such a breakout occurs, it also becomes easier for investors to set targets. With no major resistance ahead, the price is expected to move toward previous highs or technical targets such as Fibonacci extension levels. Additionally, this breakout can boost market sentiment. Seeing the breakout, other investors may implement breakout buying strategies, which in turn can push the price upward even faster. Order block breakouts can also serve as triggers for algorithmic and institutional strategies. Many large investment funds program their algorithms to act on such breakouts, adjusting their positions accordingly. This can lead to sharp and rapid price increases after the breakout. Retail investors often join in as well, and the market may quickly enter a high-momentum uptrend. In this context, it should be noted that the price is currently facing a bearish order block and appears to be on the verge of breaking through it. If the price exceeds this level and successfully retests it while holding above, it would be considered a bullish confirmation from a technical perspective. Such a development gives investors confidence and indicates the beginning of a broader uptrend. At this stage, it's even possible for the price to reach new levels and potentially hit a new all-time high. After such a breakout, new chart patterns may also form. For example, formations like the cup pattern, bull flag, or ascending triangle are often observed following such resistance breakouts in technical analysis. These patterns provide additional signals to investors and can be used to calculate potential price targets. In a cup pattern, for instance, the price target is typically equal to the depth of the cup. If such a formation aligns with an order block breakout, the upside potential becomes even greater. In conclusion, if there is a bearish order block at the current price level and the price is approaching it, this is a critical development. A breakout from this level indicates a shift in market power in favor of buyers. A retest following the breakout allows the price to move upward more securely. If volume, momentum, and overall market conditions support the scenario, continued upside is very likely.
Investors should carefully construct their strategies in such situations, monitoring technical indicators, volume, and chart patterns to make informed decisions. But we can't base our analysis on order blocks alone. Let's take a look at other metrics as well. Stay tuned.
I'm interrupting the video for a moment, friends, because Bitunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus. And if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
Upon close examination of the chart, it is evident that the price action is forming a classic and highly reliable technical pattern known as the cup and handle. This formation is frequently used in long-term technical analysis and plays a significant role in identifying potential major upward movements. The cup part typically forms when the price first declines and then gradually recovers over time. For investors, this generally signals the beginning of a recovery phase and indicates that the supply-demand balance is slowly shifting in favor of buyers. After the cup is completed, the price usually enters a short period of sideways or slightly downward movement. This area is referred to as the handle. The handle is often interpreted as a resting phase before the breakout that completes the pattern. In the current situation, the price action appears to have completed the majority of the cup and is now in the process of forming the handle. The handle typically appears as a narrowing structure or a horizontal correction. This structure allows the price to consolidate energy, absorb short-term profit-taking, and prepare for the next strong move. Therefore, once the handle is completed, a sharp upward breakout is highly likely. The target price following the breakout is projected upward by the depth of the cup. Additionally, volume confirmation is a critical factor in this type of formation. If the price breaks out of the handle area to the upside, and this move is accompanied by a noticeable increase in trading volume, it strengthens the validity of the breakout from a technical analysis perspective. Breakouts without volume often lack conviction and can result in fakeouts. For this reason, it is extremely important that investors pay attention not only to the pattern itself, but also to the accompanying volume. At this point, another factor investors should consider is the overall market trend. If the broader crypto market or the specific asset class being analyzed is in a positive environment, strong patterns like this tend to play out more effectively. However, if the market is in a negative phase, the reliability of technical patterns can be delayed or invalidated. Therefore, when analyzing a cup and handle formation, it's important to incorporate not only technical, but also fundamental and sentiment analyses. Price compression within the handle is a natural process. During this period, some investors may exit their positions out of frustration, but those who remain patient can reap significant rewards. This compression phase is when the price decides its direction and builds momentum. Once this phase ends, the pattern typically results in a sharp and sudden move upward, allowing for large gains in a short time. The 0.07 target is not only a level derived from technical analysis, but may also act as a psychological resistance. Round numbers or whole levels often serve as key psychological milestones for investors. As the price approaches this target, fluctuations and profit-taking may occur. In conclusion, the current cup and handle formation on the chart presents investors with a structure that offers significant potential and is widely regarded as reliable in technical analysis. If the price completes the handle and breaks out with volume, the likelihood of moving toward the 0.07 target is strong from a technical perspective. For the pattern to function properly, the handle should complete without extending or breaking structure, the breakout should be supported by volume, and the resulting move should continue with momentum. As of today, evaluating the 300,000 Zbcn coins we currently hold reflects a highly critical perspective in terms of investment planning. Thinking long-term in the cryptocurrency market and making projections based on future scenarios gives investors a strategic advantage in decision-making. Based on the data we have, the 300,000 Zbcn coins currently equate to a total value of $1,500 USD. Under current market conditions, this amount appears to be a very favorable investment opportunity. In crypto assets, potential profits are shaped not only by today's value, but also by future expectations and target prices identified through technical analysis. Now, let's calculate the potential profit if our 300,000 Zbcn coins reach the target price of $0.07. If each of the 300,000 coins reaches $0.07, the total value would be $21,000 USD. Compared to the current investment of $1,500, this represents approximately a 14x increase or a 1,300% return. Such high profit margins are rarely seen in the investment world and are generally achievable when long-term strategies are followed. These types of gains typically result from patience, discipline, and the ability to correctly interpret market data. The technological infrastructure behind the Zbcn project, the success of its team, community management, and financial partnerships also contribute to increasing confidence in the project. Currently, acquiring 300,000 coins with a $1,500 capital could open the door to significant future returns. However, the most important thing to remember when investing is that there is always a certain level of risk. Since cryptocurrencies are volatile assets, prices can move quickly both upward and downward. Therefore, paying attention to risk management and capital allocation is essential to securing potential profits. The potential for 300,000 Zbcn coins to reach a value of $21,000 is directly linked to the investor's belief in the market and patience. Pullbacks, correction phases, or consolidation periods that may occur before a rise are tests of the investor's ability to stay committed to the process without making emotional decisions. At this point, avoiding panic selling, monitoring the market closely, and analyzing developments rationally will increase the likelihood of reaching the target. Additionally, staying engaged with the community, following project updates, and paying attention to announcements from the development team are very important for making strategic decisions during the investment process. Investing early in promising projects like Zbcn can yield significant returns over time. Today, purchasing 300,000 coins with a relatively small amount like $1,500 could lead to a substantial capital increase if the target is reached in the future, providing the investor with $21,000 in return. An investor who patiently waits through this process will benefit not only financially, but also in terms of improving their skills in strategic thinking, analysis, and disciplined investing. In conclusion, while the current market value of 300,000 Zbcn coins is around $1,500, if the target price of $0.07 is reached, the investor would obtain a total of $21,000. This represents a nearly 14x increase. Opportunities like this are rare in the crypto world and are often the reward for patient investors who choose the right project at the right time. For investors who enter visionary and developing projects like Zbcn early, such a scenario paints a very positive and hopeful picture. Of course, reaching this target for Zbcn won't happen immediately. It will take time.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.